Awesome. Sounds good. Thanks for the introduction. Can you all hear me? If you guys can write in the chat. I'm a very interactive person, so if you can hear me and see my screen, if you could just put yes, that would be awesome. I'll give it one or two people. It's my first webinar with you guys too, so there we go. I see you guys. It's in the questions box. Awesome. Can you give some ideas for setups on lower time frames? Yeah, sure. So my approach today is going to be very different from the ones you all have already listened to and viewed. Let me just go ahead and actually fix this box up a little bit so I don't have to scroll up and down too much. I think that works. If I can make this full screen. Alright, as I get through it, just shoot me another message if I don't get to your question. I'm pretty much, I see it, just trying to make it a full box. Alright, but in any case though, today we are going to be covering risk management and price action. As noted before, I will cover a lot of price action developments on different time frames. My time frame of preference is 4 hour. And I'll give you live charts. Just me personally, I'm pretty sure you guys don't want to see another PowerPoint presentation. So I'll be mostly through that. And at the same time, I'll be also going risk management, right? Because seeing a trade setup is one thing. I would say that's about 50%. I give 30% to risk management, and then I give the other 20% to the exit point. And you could probably play around with those percentages to the point of it being 33.3% each. At the entry, your management behind it, and your exit are all as important. So that's what we are going to be focused on for the next hour. And then as we get through each point of reference, interrupt me as you like. I actually prefer that, and then I'll get to your question, okay? So with that being said, I'm going to let you guys pick which one you want to start out with. Do you want to start out with the risk management, or do you guys want to jump straight into price action? I'm just going to shoot a message over to Kevin real quick.
It's mostly price action. Almost everyone except for a handful of people. Can you see it? Can you see it okay, Michael? It's in the questions box.
There we go. Okay. Okay, there we go. Now it's okay. Perfect. No, yeah, I was trying to blow up the questions box. Awesome. All right, so great. So let's jump right to price action. Just bear with me, guys, as I get through this. So what I mean by price action, I'm going to tell you exactly how I trade. I'm a technical trader, technical analysis, meaning I don't really care too much of fundamentals. I know Barry has another side of it, 50-50. He just spoke about it. But in my opinion, you see technicals first, because of a fundamentals, just as Barry said earlier, the technical picture, price action, whether it's good or bad data, the market will tell you what to do. Fundamentals will not, in my opinion. And you can see that by looking at a chart as over time, these things come true, okay? A quick history on my background just before we dive right in. Quick for 2 minutes. I used to work for Smith Barney in Boston when I was in college. I've also worked for Putnam Investments under mutual funds. Also worked for Royal Bank of Scotland in London. And then I was actually an analyst at FXCM's Daily FX umbrella. Okay? So only been in this market for quite some time. Well, for quite some time. So don't mind the baby face. All right, but a lot of history. And then again, as Kevin said, I am the chief strategist, founder, CEO over here at Global FX Club. Right Time Capital is our group, but we are the traders, the head traders over there. and we do manage Global FX Club as well as some others. All right. So in any case, though, let's jump right in. So price action. Price action. I actually want to start from Aussie. I would say other than current price action, Aussie dollar doesn't do too much erratic movements. All right. So price action is looking at the bars in between. All right. So just a quick backing. Have all of you guys been trading for at least 6 months? Okay, perfect. All right. So the reason why I'm gonna ask these questions as I get through it is because it's very important. Because for me, trading for quite some while, or a couple other guys, if you have at least 6 months, you know the price action is the green and red bars. Okay, if it goes higher, it's green. If it goes lower, it's red. Right? So price action is looking at this basic simple chart. But my angle is what's next. Okay? Anybody can see if I look at all the way to the right, I could see this is a green bar. That's fine. All right? But what's next? A simple trading tool, price action wise, will be trendline resistance. Right? If it tests, you're looking to get short. Right? So that idea set would have been wrong here. But matching price action with risk management, your stop is slightly above trendline resistance. Your chart is slightly above here. Then you know if price action, this is a 4-hour chart, okay? Now, worth noting, this same idea set will apply to any time frame. Because price action, whether price action is an hour, 4-hour daily, 30 minutes, etc., is price action. The only difference is that on shorter time periods, there's more fluctuations, right? You may even see a higher degree of false breakouts. That's why I like to stick in a 4-hour time frame, because you don't get too much of those false breakouts, okay? But in this idea set, if you risk, let's say your stop was, I would have put 40 pips. I prefer 40 pips, okay? So this is price action mixed with risk management, because I'm not going to allow myself more than 40 pips. However, if we get a 4-hour close back above resistance, I'm going to close it. Why is that? Because it negated that first movement, all right? Because I would look for downside moves against here. So if you caught it at the trend line, 104.90, that full bar here, the close of here was only 105.05. So you only lost 15 pips. Though your stop was 40 pips, it has never ran 40 pips. You had that there as a safety net. All right? So in my opinion, fundamentals, Miles Davis asked the same question when it came to music. Do you see how trading can be much like playing music? I'm not sure what you mean, JD. But in any case, you lost only 15 pips. Your reward would have been down towards 103. All right, this is trading price action with risk management. In my opinion, not having a stop is no management behind it. Because what's going to stop it from, let's say you going to sleep, you catch 8 hours, what's going to stop 2 4-hour bars running 100 pips? Now, instead of losing only 15 pips, you lost 100 pips. Also, my thing about looking at time frames is if you're trading on a 4-hour time frame, you're waking up most likely every 4 hours if it's this close. Because you have to see, okay, here, if it breaks above, I'm going to close it out. If it goes in your favor, my rule of thumb is I like if it goes about 30, 40 pips in my favor, I go to break even. That's management. Right? So after I go to break even, I can sleep all I want because my worst case scenario is flat. Right? Also going into a trade, you have to have sort of target set. Right? Either if it's going to be a JD says Miles used to ask what's next. Exactly. That's true. Always has to be what's next. So you caught your entry. Remember earlier I was saying the percentages, 33.3% each. Okay, the 33% first one was first. The second one was break even and target zones. right? If you're entering a trade just to enter it, maybe you get out for 20 pips, but all it takes is about 3 stops out, 40, 80, 120. That 20 pip profit didn't mean anything. So have an outlook. Risk to reward is important, right? So if your stop is 40, you want at least 80 pips, ideally, right? Because 2 stops out gives you 80 pips, but 2 targets hit will give you 160. So your win-loss ratio, in my opinion, doesn't matter. When you have proper risk management, which aligns with price action. Is everybody with me so far? Is everybody with me so far? So this is just one example of price action. But in my opinion, every time you're looking at a chart, you are automatically aligning next, right? So if you're playing a breakout, this is why I mean fundamentals are not as strong as technicals, because technicals will give you a risk. All right, what are you going to risk? If I trade fundamentals, right, all I know about, honestly, is what's going on in Syria and a little bit of the Eurozone, but not too much. But if the Eurozone is going to go to the shitter balls to say, what am I going to have, a 2,000 pip stop? You're not. So you have to align it with a technical outlook, right? So one trade I remember taking, this was a gap open. I remember this Aussie open, and we put our stops right under the recent low. So at the open was about 89.50. Stop was 50 pips, 89. It never came back. 30, 40 pips in my favor, break even. After that, looking at this area here, I knew the next major resistance level was the trend line. So the trend line, as we get long around 89.50, wasn't until 91.50 about. And you can see, as it pulled higher, it did test it, and then it came back. So you ideally getting out here, right? So this is only using trend lines, all right? I'm using price, so don't mind this fib extension. That's a whole nother lesson, a whole nother course. If we get to it, we get to it. I highly doubt it. But price action for me, I also match it up with Elliott waves. The reason why is because Elliott waves allow me to have a target, right? Whether it's a measured move goes about 100%. Define your pip. I think that was a statement, or is that a question, Jim? Maria says, can I explain the entry, how and where you would enter the market? You know what? Let's give another example. I'm not here to sell anything today. Okay, so just came to talk to you all, but I'll show you a great example of a trade we took last week. We took this, I'm not here to sell anything, but we took this trade Thursday, okay? This was a short CAD yen, all right? Now, with what we do over here at Global Fest Club, Right Time Capital, every time we take a trade, we post a setup, okay? With that, so posting a setup, I have everything archived, all right? Now, this was a CAD yen on the 4-hour chart. Price action, okay? And this is price action mixed with risk management. Like, in my opinion, there's no price action without risk management, and there's no risk management without price action, okay? Now, I'll tell you exactly. Okay, so the CAD yen short was taken at 96.40, 97 old stops, all right? Giving you a 52 pip stop. Target here, 95.20. Okay, so 52 pip stop, and we have about 100 pip, over 100 pip target. Okay, so the entry here, because this is your question, right, Maria? Entry here is trendline resistance, and then fib resistance as well. So then you have both bases. Now let's go back to a chart and let's pull it up now. I'm already at break even, okay? So I just want to give you that basis. Now on the 4-hour chart, you couldn't really see it. Exactly. Exactly, JD. Just integrate price action and management at once. Exactly. Now, in my opinion, those who don't do it or have no idea the first time is not common. Right, JD? You probably have been around for quite some time. That's not common. See, so here, 61.8% Fibonacci retracement and trend line. Until this breaks, this is a valid move. In my opinion, there was no fundamental reason to spike here. Right? If you were caught in this move, you're just looking at it like, okay, it's going higher. That's never the point. It's always what's next. These circles are gaps. This is continuing our favor. We'll be targeting these gaps. So 95.20 here is an open gap. How did I pick my stop for this trade? I wanted it above. So my thing with any yen cross, they are a little more volatile. That's price action, right? Once you start to really watch price action, you get certain feeling, so to say, certain sentiment behind different pairs. So you have the yen crosses are a little more volatile. So sometimes you'll see a spike and then it'll still make an hourly close below. One other thing about price action is that exactly, waiting for confirmation, right? If you're on a 1 hour chart, you have to wait for a 1 hour close above or below support or resistance. If you're taking a trade off of resistance, you have to take it, put your stop, and kind of walk away and come back the next hour, because sometimes it could spike, close below, and then drop. But because you were not patient enough, you got caught in that spike. So my stop for this trade, I put it far enough. I never really want to go too much over 50 pips, 50, 60 pips on a yen. But for this one in particular, 97.0 was near the top. So I like that, and then it was also above the 78.6% fit, because only above that will then bring new highs. But here, if it broke above, I would have then flipped around, got long, because now this trend line resistance becomes support. Then your stop becomes under there. Right? And then when I say under there, it would be under support if it did break, but it didn't. It rejected. Okay? So what this is not an indicator. Well, the Fibonacci retracement is. The indicator on the bottom is RSI, but the RSI I only use for divergence. What's divergence? Divergence is, sorry guys, I'm still getting used to GoToWebinar. My first time using it. Let me give you a great one. Oh, here. Let's look at a daily chart. Worth noting, I have different time frames. So you see these. This is a 4-hour, daily, weekly. Important to match up higher time frames when going under and looking at a lower time frame. Okay? Let's look at, okay, we can look at, let's keep eyes on dollar yen. This is a dollar yen daily chart. Momentum divergence. So to call this, we're looking to call this a high. When you're looking for it, you saw divergence. So yes, RSI is an indicator, but I don't really use it for overbought or oversold territories. I only use it if price action keeps on making new highs, but momentum doesn't. From there, I'm looking for a reversal. Why is that? Because price action is gaining without momentum. So a sharp drop is on the horizon. What was that drop? 103.40 to about 94.50 about. Okay? So in any case, if we were looking at this right here, how would you pick your stop? You pick your stop. Me, I like 40 to 60 pips. So that's just average for me now. But depending on your time frame, you want to keep it far enough but not close enough, okay? Not close enough because, again, those spikes could take you out. So here, looking at this zone here on this trend line resistance, let's sharpen this up for you guys. All right, so I'll do this for the next 10 minutes. Then we'll do some more clear risk management. I'll do that for about 10, 20 minutes, and I'll get to some more of your questions. So here, every time, so this third test, another key reference for you guys to use is the third test of a trend line is usually the strongest in terms of staying within the trend. All right, you know, Barry last webinar was saying a trend. This is clear trend. All right, to the downside, and this was the third test. Now, my idea set is, of course, we can all see where price action is at now, but how are you going to trade it at the moment? My answer to that is by having a clear management style, all right? So if I'm getting short here, just because I like 40 to 60 pips, I'm going to put a 40 pip stop. Let's say 102.40, 102.80, that's far enough for me, all right? Now, I know for myself, I'm going to go to break even, 30 to 40 pips, which it did. So it got there. I'm at break even now. So what's next? Depending on where I'm at performance-wise, also depends on how I manage a trade. Sometimes I will go a quarter off at plus 80, leave stops at break even. So that means if I get stopped out, I'm going to get stopped out for an average of plus 20. Right? You do from Wright 80 divided by 4. Right? Does that make sense? And that will allow me to stay in profit, even if it comes back. Another style, maybe you want to do half off at 100, and then the other half at plus 200, giving you an average of 100. By taking half off, in case it pulls back, you're still going to come out in profit. Your profit will be 50 pips. Okay? So there you go. Price action and risk management again, using this example. All right? Or you can have this set knowledge that every time it tests trend line, you want 2 to 1 odds. So every time it tests, you're going to go 80 pip target, 40 pip stop. Break even after 30 pips. So the management already is intact before you even take the trade. Where people go wrong, in my opinion, is, okay, the market's going higher, I go long now. Okay, wow, I'm up 30 pips, I'm out. But you had a 40 pip stop. So your risk reward wasn't in your favor of that trade. If you keep on doing that, all it takes is about 10 wrong trades, which can happen to anybody. But if you have 2 great runners, you could be profitable for the month, for the week, whatever your time frame is. By using that, we come to being profitable over a long period of time. Okay? And this here, this is a management file that I created a little while ago. Okay? And within this, and then within this right here, let's see, I think, all right, here we go. So let's say, this example, let's use, I don't know, let's use 50,000. Okay? By going to break even, as long as you're up pip-wise, you should be up capital-wise, okay? Let's say we're going to do for September. The reason why I did this is to show that you don't need a runner every single trade. I think, not that I think, but Forex traders go wrong management-wise because we are all exposed to the $1 trillion a day market, 24 hours, etc. Everybody is trying to double down that day. But if you take your time at it, have risk management, let's say you're only risking 1% per trade, 0.5% per trade, right? Your pip-wise is going to be up capital-wise. So here, this example, 50,000, let's say you only aim for 5% per month. Very doable in our market, right? People are aiming for 100%, right? The capital goal at the end of the month is 2,500. Fine, right? let's suppose you made 3,000. So you actually, your PL versus your goal is up $500. So where are you now in terms of your goal? The end is 53,000. You didn't really need 53,000 until the second month, and you're still above your second month. So suppose that second month you only made 2,000, a little bit shy of your goal, 55,000, but you're still just about on pace with the third month. By staying on pace at a compounding rate, you almost doubled your money in a year. You're up 35% by managing risk properly. Whether it's 0.5% per trade, whatever else it is, you really need to analyze your trading system. Analyzing your trading system and having patience and going along with price action and risk management leads you to a yearly goal. Okay? So far, everything makes sense to everybody? I seen your question through NG about Ichimoku. I'll show that shortly. I'm part of price action, a little bit different, but I'll show you that. Alright, but is everybody with me so far? Any of this new to anybody? Okay. Awesome, awesome. Alright, clear. Okay, so the basis of Ichimoku Kinko Japanese style trading model, if I'm not mistaken. Can I show you how to use it? Reason why I stumble on that question is because it's many ways to use it. It's I use it solely for strategy base. In my opinion, there's no thought process needed. Is that you do as you apply. What do I mean by that? So one, I'll share with you guys one strategy that we have. It's the euro dollar Tenkan Kijun crossover. So the weak Tenkan Kijun crossover, what that is basically saying every time the blue, so okay, here he goes. The blue line is the Tenkan, the pink line is the Kijun. GR Carol says the special offer link for the is not working. Okay, I'm pretty sure Kevin will get to that. But one strategy is when the blue line, the Tenkan, crosses below the pink line, the Kijun, that's a weak turnover. If it's above the cloud, you take a short. Okay? The crossover has to happen above the cloud. So here's an example. You see here, this circle here? Well, I have a couple circles. Let's focus on these for now. So here, if it this crossed above, you are going to take it with a 24 pip stop about. Sorry. You're going to take it with a 24 pip stop, and then your target is 29 pips. Your break even is 23. So you have that. So it ran up. You see here, crossover below, it ran up, crossover above, ran down. Another way to use the Ichimoku cloud, and mind you, this is a 1 hour chart. Another way to use it is if it crosses above or below the cloud. I don't have results for that. I can show you results. But if it crosses above or below the cloud, you likely put a similar strategy behind it, 30 pip stop above, targets, let's say 60 to 70 pips. You could also have a strong Tenkan Kijin crossover. Jay says you have to set the time axis to 26 units ahead. I do. I was just showing examples. So if you look at my chart, you'll see is time is ahead. But good note, Jay. Indeed you do. But worth noting, Jay, for a strategy, it doesn't really matter what's ahead because you're applying strategies. And I have this scripted, so this is automated. So you may ask, how well has it performed over the last year? Here you go. For 2012, it's provided 32%. Year to date, 39%. Of course, you're gonna have some minus months, but the whole picture. Here you go. So one of our better ones, Euro Aussie one, probably will likely go ahead and add this to the arsenal. Similar idea, just target prices, stops, break evens are different. I would say Euro dollar is a lot tighter, but this is just examples. So again, in my opinion, once you use certain indicators that, especially lag, that catch momentums, moving averages, Ichimoku, I don't know too many people who strictly use the RSI, but if you do, you need to see the big picture. Okay? Very important zones when, again, looking at price action and risk management. Alright, so let's go on and focus more on that angle here. I'll get that question soon, but JD asks, what predetermined strategy do you have that use early reversal signals? I don't have anything of that sort. Mostly momentum. And we're looking at price action. If you're looking for reversals, you're looking for a R to R strictly in your favor, then you're likely to only use price action versus set strategies, price action trend lines, Fibonacci retracements, and extensions. Alright, so let's focus a bit more here. Alright, so by now you understand the price action points here. Alright, so to go over a few examples of the management and exactly what it is and why we do it, take a look at the euro dollar. Entry 130, stop 126, target 146. Okay? Once price action moves in your favor, alright, you set your target. There are a few things to understand, such as when to go to break even, as expressed earlier. Here, there's no reason to be up about 80 pips in a particular trade and then get stopped out for a loss, in my opinion. Right? So to eliminate the mental and emotional issue, okay, set a break-even range. Management again. As I noted before, 30 to 40 pips is ideally where I want to be. Maybe for you, you are a little more emotional or you're less emotional. So you can have a tighter or wider stop. Okay? Another zone is when and why to scale back. Alright? As we all know, the market isn't a one-way train. Alright? For those of you guys who are new, important to know that. There is volatility, and to sit in front of the computer counting every pip, you will likely drive yourself crazy. Alright? So again, set target zones. In this example, using the Aussie dollar, we show one quarter for plus 50, another quarter for plus 100, third quarter for plus 150, and the last quarter for plus 200. All right? For example, one third for plus 65, another third for 65, and another third for 70. Break even could be the same. Example 3, a half for plus 100 and another half for plus 200 after your entry point. So, do you all get where I'm going with this? Okay? Making it clear? Makes sense? Out of curiosity, do any of you guys use similar management styles? If so, please do share. Okay. For those of you guys who don't, applying something similar, do you think will help? Great. Toby says yes. Very well so. It allows you to be wrong a couple, maybe a few times, and still be profitable. Set your profitability zones too for if you're looking to be profitable for the week or the month or even the quarter. All right? Take this other example. Okay? Example 3. Example 4. A half for plus 100, a quarter for plus 150, and another quarter for plus 200. All right? JD says, what are you doing to set your target zones? You're looking at a chart. If it's for a strategy, they're already predetermined. All right? For a strategy, what I like to do even before I even come up with these target areas is run an optimization. All right? So no longer do I work for FXCM. I don't have no offers, but I really do like the MT4 platform. And with the MT4 platform, after you came up with a strategy, actually, let's see if I have any available. I'm going to show you if I have any optimizations results. Oh, here we go. Perfect. So with this optimization, it takes about a couple hours. And when I say a couple hours, I really mean 10 to 30 hours. But it will give you different scenarios. Very important for your management. With the different scenarios, the profit that would have generated for that time period, for me, I'll at least want to run a strategy for at least a year. But after that fact, it will tell you take profit areas, break even, stops, etc. And under those conditions, which one has generated the most. So after I eyeball it, JD, I then try to perfect that strategy created with that indicator and run an optimization. See what is done year to date, last year, 2010, etc. No strategy will have, in my opinion, a 100% success rate, but if it could be right more than wrong, and then you can have different strategies to hedge each one, right? Suppose you have 3 strategies. If one goes shot, you had 2 to support it. So again, even with the strategies, you want to hedge yourself once more. Okay? D says, do you trail the last lot traded on runners? Sure. I trail it. I don't use the trailing stop by the system, but what I do use, I'll just manually trail it. So if I'm up 100 pips, I may try to lock in 20 pips. All right? Room to fluctuate, depending on what was broken, key support or resistance. If I'm up 200 pips, I may aim to trail and lock in 80 pips, maybe even 120. just depends on what the overall market is doing. Okay? Here we have incorporating risk management into trade management. All right. If any of you guys will like any of this material, I'll be happy to email it to you. My email is trade@wrightinv.com. I'll be happy to send it over, or the next webinar, I'll give access to it, and you guys can see it there. All right. Here, this is just in the back end of my site, so I'll speak to Kevin about that later or on Monday. All right. More examples. If I'm not mistaken, this is being recorded anyway, so you guys could review it. Okay. But again, here, key components. All right. Risk reward settings, capital settings, and again, another zone. I'm going to slowly scroll this, so there you can come back and then obtain it. All right. Always see the picture at the same time. My email is trade@wrightinv.com. My last name, Wright, then INV. So are you setting your profit target zones and your monthly goals based on the strategy optimized? My target zones, yes. My capital goals, no. Set amount allocated to each one, and never will completely over leverage, but it's a good size on there. All right, my email is trade@wrightinv. I'll speak to Kevin. I'll give him access to it, and then he could email this out to everyone. Very important there too. All right, the last area, one of the other areas before we go back and I answer any more of your questions, is the importance of proper leverage. All right, very important for us as FX traders. Again, there's nothing bigger than this market, and to blow your account for a week, which too many traders do, you're looking at 95% of traders lose money. Shouldn't be occurring. All right. So leverage is the single most valuable tool for forex traders. It allows us to create a lot of money using only a small initial deposit. All right. Funds, private investors all do it. Capital preservation is a must, especially for your hard-earned money. All right. The money in your account is your capital. Is your lifeblood as a trader. You should do everything. It's like your family. You do everything to protect it. So, indeed, this is almost like lotto, but you wouldn't treat your family like a lotto ticket. You're protected by every means necessary, and the same thing should account for your account. There is no get-rich-quick scheme for Forex. Trading is about patience and hard work. More so patience. As I showed before, using the trading calculator over the period of months, you could obtain your goals over a period of months rather than try to obtain it next week. In my opinion, trying to obtain it next week is going to be the demise of the account. All right. There are dozens, if not hundreds, of risk management systems out there. Some are more valuable than others. Generally, what I would say is you want to trade around 1 to 3% of your account at most. 1 to 3% could be taken a couple ways. 1 to 3% per trade, or 1 to 3% open risk. Right? So that means if you have 50,000, 3% of that is only $1,500 of open risk. Okay? So you want to set your stops accordingly so that you don't have more risk than that. And then you can say, okay, maybe that allows you 3 open trades. If so, you only allow yourself to go into another trade as if either you get stopped out or you go to break even on one. Right? So you keep yourself on a tight leash. You manage your account. All right, make sense? Hope I'm not losing anybody. Anybody have any questions on the percentage per trade so far of ideally what I'm talking about? Don't be shy. With you. Okay, Toby. Great. Thanks. No, I really appreciate the feedback. Big says I have no idea. Well, take that example. Again, of 50,000, what I'm basically saying is if you manage your account properly, let's say you do 1 to 3%. Suppose you're a little more risky and you do 3%. 0.3% is only risking $1,500 for that trade. Why should you risk 50% on one trade? You're not allowing yourself to be wrong. We can all agree the market is a beast. The Forex market is a beast. So protect yourself. Let's stay in this for a long haul and meet our objections. Medea says, sorry if I ruined your name, Mr. Wright, this is such an excellent, complete presentation. Thank you. No, thank you. I really appreciate great feedback. I'm glad to see it's worth having me, and I definitely look forward to doing more of these. I think it's very important, especially for us as traders. When I started, I was just looking at a chart, but it's much more than that. And once you digest the whole thing, you enter the Forex place in a different mindset and a more complete mindset. So I definitely appreciate that. But back to the zone, Big, for you said you did have no idea, is setting a certain amount to risk. I like having not more than 5% open risk. I like preserving my capital. I respect the market. I respect the point that I could be wrong, but not being wrong over a period of time. The period of time I give is a month. All right? Past 24 months, I think I've only been wrong 3 times for the month. So, set stage, you will be profitable. And one other thing I don't like that too many traders do is setting different lot sizes for different positions. Because if you're up 200 pips but you're down capital, it's because maybe you got psyched out the first 2 weeks of the month and you were down, I don't know, let's say 10%. And then, or let's give it the other way. Let's say you were up 200 pips and then you started to get more aggressive towards the end of the month. You wiped away the gains because you start to leverage higher. So now instead of 1 lot, you went to 1.3, 1.4. But you were still up pip-wise for the month, but because your leverage skewed off everything, you're down capital-wise. So set that stage as well. Let me finish this, and then I'll get to your question. I don't want to mess up your name, but I'll see the last question about indicators. All right. The reason why this management is necessary is simple, is because trading is difficult. You will have losing streaks. It's inevitable. Buffett, any big hedge fund, any great trader has a streak. All right. Any strategy has a streak. All right. I can show you guys strategies for days. They may have a losing month, 2 months. The key component, even if you're using strategies, is to hedge the strategies. Right? Like I showed you before with the Excel file, the euro dollar taking keys and crossover. There was a period where they had back-to-back down months. But let's even make things better. Instead of 2 strategies, suppose I have 5 strategies. Right? If 2 of them lost money, but 3 of them did, guess what? I made money for the month. But for that month that all 5 did well, I did great. So it's even hedging within your trading style. Right? Let's suppose your main trading style, like mine, is Elliott waves. Fine. My hedge is my automated systems, because they have no bias. As a human, we have biases. And unfortunately, because I think I was seeing in somebody's slide that we are all humans. So we're sheeps. We tend to run together. For me, I'm a contrarian, so I like to see the opposite. Why? 95% of traders lose money. Any trading style could be traded with any capital. It's all about management. All right, Sammy? Whether you have 5K, whether you have 50K, whether you have 3 million, it's the same thing. It's actually funny, Sammy, because those with higher capital take more precautions, whereas those with lower capital are more risky. Right? So somebody with 2K may be trying to make another 2K in 2 days, trying to get to 4K. Somebody with 1 million is trying to get to the next 1 million by the end of the year. So the mindset is the only thing that will throw it off. But the capital doesn't change. The management needs to stay the same. All right? Now, taking this example here, as you can see from the numbers above, a 5-trade losing streak will cut your account in half by risking 5%, by risking 10% per trade. All right? If you see 10% here. While losing 5 trades in a row, risking 1% will leave your account mostly intact. All right? So 5 losses on 1% per trade, you're relatively there. If you risk 10% per trade, you cut your account in half. So I think this was Big, who asked this question earlier. He wasn't sure what I was referring to. This is a prime example of what I'm referring to. Risk management. Knowing how much you're risking. The flip side, this of course, is if you have a 5-trade win streak. The account will grow much faster if you're risking 10% a trade than if you are 1%. The issue, however, is that Forex trading is hard, and most of the time you will have more losing streaks than winning streaks, which is fine. Because if you let your winners run, you will be profitable. All it takes is one bad month to wipe out an account if you're trading at 10%. Forex trading is about slow, consistent account growth. The best way to make money trading Forex is to protect your account, protect your capital, and manage your risk. All right? So we have about 6 minutes. With 6 minutes left, do you guys have any further questions for me, concerns, anything you would like me to review, approach, or even feedback? I definitely appreciate all of that. Talk to you about spread. It depends on your account size and which broker you're with. So I can't say much because it depends on the broker and your accounts. Because I know some brokers, if you have a higher account size, the spread is lower. For example, I don't really want to advertise any brokers, but there's one broker in particular. If you have over 25,000, the spread on the euro-dollar round turn is 1 pip. Whereas if you have 1,000 with that same broker, that spread is going to be almost 2 full pips, 1 each way. So it's double. Take, for example, another one, Euro Aussie. One broker may be somewhere near 8 pips. Another one is 4. 4 is average round turn if you have average size. So it depends on the broker and the size of the account. HE says, great. How many contracts do you trade on any given time? Depends on the account I'm trading on. I have 4 different brokers. The reason why for that is because I'm in the US and I can't hedge. I have strategies on different time frames. So the euro dollar, I will have one strategy on an hour, another one on a 30-minute, another one on a 4-hour. So it depends on which account I'm using. Uh, can I, no problem, Sean. Al says, can I give an example? Can I give an example of another trade? Sure. As you can see, I will always go to a 4-hour. I just prefer that. I could give an example of Kiwi dollar, another one. So for me, I'm more of a Elliott wave trader. Um, Here we have a Kiwi dollar. The previous high, just to focus on the previous one, I'm talking about from 81.50. This high, not this one, but it's about the same thing. I like measured, so using Elliott waves, the three major zones when using a fib extension is 100%, 161.8%, and 261.8%. So you can see here how it came to test the 100% and rejected. Now we had a double top, and you kind of see the same thing. So though I'll slide the extension over, I think my computer's freezing because I have too many files open. Any case, yeah, my computer froze. But I like fib extensions. We have that there. Also important to note retracements. The three zones of importance is the 50%, 61.8% the strongest, and then you have the 78.6%. I like the 78.6% retracement because you will go against that recent high or low. Alright, so if I come back to another webinar, I'll focus more on extensions and fibs. So I hope to see you again on the next webinar, and I'll talk more about that. It's just another angle. Gover says, great show, Michael. Thanks. Anytime. Ron says, having a risk management system and trying to be 50% risky and 50% conservative. How much will be a good amount of money to start trading? Like I said earlier on, it doesn't matter the amount. It just matters the management. So whether you have 1,000, whether you have 100,000, whether you have 1,000,000, it's the same. Hey, and I would even say if you're brand new to even start off on a demo. Al says, good stuff. Hope to hear from you again. Thanks, Al. Really appreciate it. And Peter. Great, guys. I really appreciate it. I didn't expect the hour to go by this fast, but it has. Stan, I'll make sure to do that at some other time. I think we're going to wrap this up. I think Kevin comes in at any time now.